U.S. stock futures falling this morning as President Trump's reciprocal tariffs take effect. The latest drop sending the S&P 500 within 1% of a bear market. But some strategists are saying the S&P 500's drop below 5,000 means it's time to buy. So what's next for the stock market? Joining us now with their take, we've got Michael Kantrowitz, who is the Piper Sandler Chief Investment Strategist. Michael, good to have you here with us this morning. So is the drop below 5,000 a buy signal?
Not necessarily. I guess I'm more catalyst driven than I guess historically analog driven. I think it depends on investors' time horizon. Of course, a lot of stocks are down a lot more than the popular averages. So for those investors that are longer term focused, perhaps you can start to nibble in on some names that you want to own for the long term. Our clients are institutional investors that have to be largely invested most of the time, and so we ultimately think the catalyst needs to be a change in the tone of rhetoric, and that a lot of historical analogs may not be as useful today because of this really unprecedented situation.
And talk to me about the retaliation we're hearing from China, that 84% tariff on U.S. goods. At what point, in your view, could the market just get fatigued of the constant ratcheting up of these tariffs? Or do you think that there's still more pain to come as we get these headlines?
Yeah, I mean, it's certainly been a lot of shock and awe in the last week and a half, really since Liberation Day. And I think, we've certainly seen expectations of Trump's policy agenda come more in line with what is the current reality, whereas I think most investors were not believing that Trump would do what he ended up doing or anything near what he ended up doing. So that potentially could lead to a little less of a negative reaction. But if things continue to escalate and the duration of this persists, then we start to see the data get worse, and that could lead to people focusing on a more ominous outlook for the economy.
Michael, you mentioned you're catalyst driven. To what extent is this earnings season a catalyst either to the upside or the downside, as we're starting to get some of the kind of early thematic common denominators that could be cited among some of the most major and household name companies, and that word is uncertainty?
Yeah, well, I think it's interesting. Today we heard from both Delta Airlines and Walmart, two companies that really provided a huge negative shock earlier this year when they reported their earnings. And today, Delta Airlines, I think that stock is flat or even up a little bit, despite the market being down. They pulled their guidance, which I think we're going to see a lot of in this earnings season, because the reality is just that everything is so policy path dependent, and companies aren't going to really be able to provide high quality, high conviction guidance. Walmart maintained their guidance for the full year and for next year. So I'm not so sure we're going to learn a whole lot, but certainly expectations have come down a great deal with the market. And so I'm not so sure. I don't think earnings season will actually be a big negative catalyst. I think it'll give investors some hard data to wrap their hands around, some understanding perhaps of how business has been in the last couple of weeks. I think that'll be a question that investors are asking, because what happened in the first quarter at this point is really old news. But I think we'll see more corporate uncertainty rather than corporate bearishness. So it could be something that actually is more of a stabilizing factor rather than a big negative.
To what extent are valuations coming in a bit? And I'm hearing this question from a couple of retail investors, that they're nibbling where the valuation problem has gotten less significant. Is that something that you're hearing from substantial market participants, that valuations coming in might be a positive catalyst?
Yeah, certainly, we came into the year with extremely high valuations, and even if the consensus earnings numbers for the market, which really haven't come down all that much for the full year, are indeed what ended up happening. The market's multiple is still fairly high compared to history, and the issue with valuation is that if the earnings outlook is uncertain, and it is literally getting uncertain by the day, more uncertain by the day, then you don't really you can't really trust that valuation, because you don't know if the earnings are to come in. You may be looking at a stock you think is trading at a 15 multiple because you're assuming the earnings expectations are solid, and you end up realizing, down the road that the earnings missed by 20, 30%, and the stock was actually, trading at 20 times back then. So and that's the issue for the overall market. So
Yeah.
I don't know if valuation, I don't think valuation is going to be a stabilizing factor for the market because of that uncertainty around earnings.
So then what are market participants hoping for? What is the big, great hope that you're hearing from folks? Because I can't find anyone, none of my sources have said that they are positively viewing these tariffs at this point. They just want them to go away. So what is the hope from participants that you're speaking with?
Yeah, so I've been trying to focus on, what could go right, because I think, like you said, the negative outlook and the bearish story is really easy to make, particularly if these tariffs all stick. And so it's unlike, again, any period in history, in that usually markets go down because there's an oil shock or an interest rate shock or an inflation shock or an employment shock, a recession. And so you have data to look at. You can kind of, we know how the business cycle works more or less. We know how the Fed will react in this period, in this backdrop. It's really the policy that's driving everything thus far. And not so much the economic data. We really haven't seen much bad economic data, at least with respect to hard data, because all this has happened so quickly. So it makes it, people want to see better, some kind of wavering, I guess, or some deals being structured. But, I think the expectations that the market's just going to bottom and shoot back up and that Trump's going to, wipe out all these tariffs is very unlikely. And I think we're going to be dealing with quite a bit a higher level of uncertainty for some time. Maybe we get some news on some deals or some negotiations start with China, but maybe they break down in a month, and so or maybe President Trump gets wants to go, gets upset by China and says, okay, the tariffs are back on, and so this is all possible. And I think that's going to maintain a high level of uncertainty in markets that are going to be quite choppy and very driven by the news. The other potential near-term catalyst could be that the courts put a stay on some of these tariffs. That was, or there's some delay in them. But again, that's a short-term Band-Aid, not a long-term bull case necessarily.
All right, Michael, we got to leave it there. Thank you so much for joining us. Appreciate it.